Good morning and welcome to Traders 20 on ET Now. I'm Megha Tadanawan. Lovely to see you back.
Lovely to be back. Thanks very much for that. Well, as you all know, Traders 20 is the show where we get you trading recommendations so that you can have a profitable trading day. Well, over the next half hour, we'll have our 6 technical experts to dole out some of the most exciting bets in the market.
And it's just not equities. We also talk commodities. So we'll be getting you trading strategies from the commodities pocket as well as strategies that would help you make the best of the futures and options segment. So let's get started, but by taking on board and introducing you to the guests who will be joining us today on the show. Well, as always, we'll have Ashwini Gujral joining in from New Delhi, Mitesh, Prakash as well as Sandeep will be joining in from Mumbai, Rajat Bose all the way from Kolkata and Deepak Mohani from Pune.
Straight to the action on the equity benchmarks, and there really isn't any to speak of right now. It's a very sluggish day of trade, and after that rally, perhaps this would have been expected. So inevitable, not any large moves on the downside. It's 59.96 on the Nifty. For the Sensex, too, we're down by 35 points at 19,730. You've got the market breadth, which is split right in the middle, and some of your rate sensitives, particularly the banking and real estate pockets, that's where you are seeing quite a bit of inherent negativity. Jindal Steel and Power down and out. You've got metals, of course, which are losing sheen. Hindalco on the losers list. So it's largely the metal stocks which are topping the losers charts. Apart from that, we've been talking about high beta. So DLS currently at 234. Quite a bit of news been surrounding that one as well. Apart from that, you've got HDFC. Tata Steel is looking fairly muted. And you've got the likes of Kotak Mahindra Bank, Axis Bank, Bank of Baroda, some select banking names. Tata Motors, Grasim also looking a tad weak. On the gaining side, you've got the entire oil marketing basket, which is holding up smartly. BPCL, ONGC, BHEL also added to that list. Cipla, Reliance Infrastructure, Ranbaxy, Ambuja Cements as well as ACC. So cement stocks, select cement stocks are seeing a good up move. Well, for the most part of it, we're below that crucial 6,000 level, but no complaints. On that note, let's get started off with Traders 20 by giving you a disclaimer first from our end. Please do make sure that you consult your financial advisor before taking any positions in the stocks that have been recommended. To start off with, we've got with us Ashwini Gujral as well as Mitesh Thakkar, who are joining in with their trading recommendations. Ashwini, how are you reading into the charts of the Nifty at this hour, and what are your top trading recommendations?
Well, the Nifty action is at best sluggish. So, while there is action in select sectors, but overall the market seems to be taking it easy. The breakout that we had from 5,900 is not even 100 points higher, so there is clear lack of momentum and big gusto in any kind of buying. So I guess being sector specific is the way to go. So oil refineries seem to be doing well today. So Chennai Petroleum, that's a buy with a stop about 138, target of 151. Reliance Capital is a buy with a stop about 496, target of 518. Tata Motors DVR is a sell with a stop about 181, target of 170. And Tata Steel is a sell with a stop about 446, target of 424.
All right, so 2 buying and 2 shorting ideas. That's what Ashwini's got for us right now. Mitesh, what about you? How do you see this touch and go that we seem to be playing with that 6,000 mark on the Nifty, as well as your trading recommendations?
Yes, I think it's been very quiet in the last couple of days. But I think, broadly we haven't got a signal of reversal, so we're still trading on the long side. Plus, I think stock-specific breakouts are still working in the markets, and that's where our focus is. I've got 4 buy ideas. The first one is Gen Irrigation, which has managed to get past the 200 average, plus some kind of sideways consolidation, which the stock was doing for last 8-9 trading sessions. Can be bought with a stop at 76.5 for a target of 83.5 on the upside. The other one is Exide Industries, which has formed a bullish or a positive pattern on the intraday charts. Can be bought with a stop at 141.90 for a target of 149.5. The third buy is buy on ABB. We have seen capital goods stocks do some kind of minor bounce back. I think BHEL plus Crompton in the last few days have moved up slightly. I think ABB is just showing signals of a bounce back from oversold levels. So not looking for a very big trend to start over here, but some kind of a technical rally or a short-term bounce back. Can be bought with a stop at 699 for a target of 735. And finally a buy on Ranbaxy, which has broken out of a sideways consolidation with a stop at 507 for a target of 540 on the upside.
Okay, that's quite a few trading recommendations, all buy calls coming in from Mitesh Thakkar this morning. But let's get in individual queries answered by Ashwini Gujral. Our first query comes in the IT space on TCS. We've got a live caller with us. Praveen Johari, he's a retired bank employee, joins in on the phone line from Hyderabad. Hi sir, thanks very much for being with us on the show. Tell us about your question on TCS.
I'm holding about 200 shares of TCS. Now, I want to know about should I hold it or sell it right now?
If you don't need the money, I don't think there is great value in selling TCS. Now, as I keep recommending that if something has worked for you, do more of it. That generally works in the markets. Right now, the IT sector, particularly large stocks, are going through some rough weather. So if you have some more money to invest, what I would suggest is you buy another 200 here and try to get your average closer to say 700, 800 and then hold on so that, once the stock does recover, you should make even more money. Chances are it will test new highs whenever, the flavor for IT stocks comes back. Good companies, great companies, whenever they go through a temporary phase of decline, long-term investors should use that opportunity to, get back into the stock even more. So unless you need the money, I don't think this is the time to sell. And if you do want to get out of this position for whatever reason, I think whenever it touches, 1500 kind of zone, that would be a good time to sell. If you just want to have your current holding, I think a stop about 1000 should be fair to keep you in your position and plus protect most of your profit. Although I don't think 1000 will come in. But these sort of companies, this is like family silver and this can be easily handed over to your kids.
Okay, so that's a word of advice coming in on a TCS. But from IT, let's take it to the oil and gas space. And the next query, in fact, comes in from Mr. Basudev Bhattacharya, who joins in on the line from Kolkata. Mr. Bhattacharya, thanks for being with us. Tell us about a question on Reliance Industries.
Sir, I'm holding 157 Reliance Industries for last 2 years. What I will do, I can hold it for another 1 year or more if it is needed.
Well, you bought it at a very, very high price. Now, you see, stocks, the most important issue there, A, is quality, but an even more important issue is the price. If you buy something at a high price and it falls off because certain expectations have not been met, Reliance used to trade 1050, 1100 because there was great amounts of gas that was expected. Now that you can see that KG-D6 is not producing as much gas, so that gas valuation is kind of going out. In any case, you've done the hard work. If it's possible, please average here if you are, if you want to make money faster in the next 1 odd year. But if you can't average, then it's a long haul for you. I don't think in the next 1 year you will be able to achieve 1050 so easily. At best, what the positive for you is that the stock has spent all its period of decline and a lot of bad sentiment is off the stock, and once we cross the next 20 bucks, theoretically the next 200 bucks open up, so somewhere around 1080, 1100 could be the target if we get this long-term bottom in place. That's still only 30 bucks from your price, so it doesn't help you unless you are able to average at current prices.
Okay, Mr. Bhattacharya, I hope Ashwini was able to answer your query on Reliance Industries, the sleeping giant which has refused to awake from its slumber, 861 on last tick. Away from that, our last and final query for the day comes in on Aptech, and this time it's sent in via email. Arvi Shah has sent the query in saying that she's bought 400 shares of Aptech at an average price of 390 rupees per share. She now wants to know if she should hold on or sell with a time horizon of the next 6 months.
I think her price, she's managed to catch almost the top that was made in early 2008. And now even after a 30% rally, the stock's hanging around the lows. while it's quite a bit of problem for her to book this sort of a loss, but I think it should be much better off, because it's not property. It's not something that you'll have development around your plot and one day your property will appreciate. This is a stock. If the sentiment is bad, if it has collapsed from 390 to 75, I don't think there's much hope. She would be best advised to exit. And the advice that I keep giving to people, please use stop losses. It's not enough to buy and hold. That may work for some people who have deep pockets, but for the ordinary person, if you buy at 390, you should have been out at 360. That was the mistake you made. See, mistakes you will make in stocks all the time, but if you don't, make them into significant mistakes where you are losing 80% of your capital, you will still be in the game.
All right, those were some pearls of wisdom coming in on Anaptec advice to exit this particular counter. But we've got some information actually just coming in on Asian Paints as well. Important, given that it's a nifty counter, that they have cut product prices by about 1 to 6 rupees a litre, and the stock is not faring too well. In fact, it's having quite a subdued day and is off by about 0.1%. We'll keep getting it. This is actually coming in from the wires. We'll get you more details by and by. But a reminder then that if you act in any of these stocks that have been discussed and take up any of the advice that's been given on the show, please consult your investment advisor before doing so. Well, it's turning out to be quite a very quiet day for trade, at least at this point in time. We've got the mid-cap index, though, that seems to be showing some momentum in the positive territory. It's up by about 0.1% right now. And the big movers here is the banking and the oil lot. So you've got an HPCL largely driven by the global cues, up by 4%. Oil India as well has surged a good 3% as well. Century Textiles, ING Vesha. We've also got an IFCI that's trading at about 35.20 right now, up by 3%. Remember, we just broken an exclusive story about the government asking the board to step down just some time ago. You can see that volume build up actually, as well as the price action come in over the last half an hour or so. You've got a GE Shipping as well as an EIH that is doing well right now. And on the loser side then, you've got some bit of pressure coming in for Hindustan Zinc as well as a GMR, which is at about 19.95 right now.
Okay, that's how the broader markets are panning out. Not seeing too much traction, so nothing really to speak about. Individual stocks holding up. Sandeep Wagle will be joining in a short while from now. Prakash Gava is here with his top trading recommendations. Prakash, what have you spotted?
Well, I'd like to go for one long and two short, starting with Hexaware as the long candidate. It's got a good base formation near the lows, seen a good up move yesterday, and today the continuation of an up move should climb to levels closer to 95. I would have a stop below 89 and trade long. So Hexaware is a buy. While I'm at one long, I'd like to go for two shorts as well. Starting with Tata Motors. Looks like it's got exhausted in the upper regions of around 320 or so. I would have a stop below about 317 and expect it to slide down to levels closer to 309. It's more of an exhaustion pattern coming in and should slide on a slow slide. The third candidate that I would like to short is Tata Steel. Again, typically an exhaustion pattern on the upside. Very strong resistance around the levels of around 300 and Tata Steel around 440 zones. Should slide down to levels closer to 430, 426 zone in the days to come. So Tata Steel is a sell, so is Tata Motors, but Hexaware seems like a buy candidate.
Okay, short on two Tata Group stocks and long on a Hexaware. That's what Prakash is recommending right now. Time to bring on board then Rajat Bose, a little earlier than usual, but nevertheless, Rajat, take us through what is on your radar right now.
I have one short sale and two long ideas, although my view on the Nifty is a bit negative, but I think that individual stocks will still carry through because generally the tops tend to happen around January 10th to about January 8th to about January 10th. So I'm still betting on some of the stocks on the long side. Here, first call is Dr. Reddy. Yesterday it had a big rally, and today also it is showing some traction in during the day's trade. Went up to 1894. After that it came down, but I still believe that it can move up to 1899 to about 1904 and put a stop loss below 1875. And the short call is also it is also an intraday call. This is on Axis Bank. I would say that you sell with a stop above the day's high, and 1372 and 1366 is the intraday target for that. and Tata Motors is actually a carry forward call, even though it is showing some weakness, but I don't think it will close below 310, hence that is the stop used here, and 319 to about 321 would be the target to keep in mind. If the targets are reached today, then you can exit, but otherwise carry till Monday.
Well, flat as a buy for the index, and pretty much a similar story for the small cap index, but it's marginally higher by 0.2%. Individual stocks, take a look at Zodiac Clothing. That one doing very well on account of India Cap Fund selling 18 lakh shares in the company. Consolidated Construction Consortium, that tongue twister is holding up very smartly in today's session as well, so firmly in the green as we speak. Hindustan Door Oliver reacting very well to that order win. Apart from that, you've got a Jayashree Tea, which is showing you quite a bit of traction, and this one has been featuring pretty often on the gainers list. That's a West Coast paper also. That's Jayashree Tea that I'm referring to, and a West Coast paper also holding up fairly smartly. On the downside, Sri Ashtavinayak, relentless selling pressure, 18% off now in the last 1 month. Chemrock Industries, no surprises to see this one on the list as well. Very small base there. You've got a Nectar Life Sciences too. That counter is off in the session by 3%. Apart from that, JK Cement, pardon me, is bucking the trend, and KEC International also down and out.
Okay, and so we've got a lot of individual movers actually still coming in, and on the buying side as well, Deepak Mohani then joins in to give us his top trading bets. Deepak, despite the fact that the markets are really flat, you still have 3 long ideas you spotted.
Well, the indices are flat. A lot of index stocks are also flat, but there are a lot of outliers which are making strong moves, and all these 3 that I've got as buys fall in that category. Escorts is the first of the buys with a stop loss of 74 and a target of 78. The stock has developed very good short-term momentum, and it's starting a move today after a brief correction, and it's already at a 5-month high. Century Textiles, this is also resuming a move after a small dip and is in fact at a 2-year high. This is a buy with a stop loss of 436 and a target of 461. Finally, Reliance Capital, always been a momentum stock. Stop loss 497, target 524, 18-month high in the stock.
Okay, that's the word coming in from Deepak Mohani and the top trading recommendations that he's got. And we've spoken also about how NIFC is clearly reacting to that exclusive bit of information, so keep an eye out on that. But away from equities, let's focus commodities, and we've got with us Manisha Gupta, commodities editor, joining in with the latest. Manisha.
Well, thank you for that, Awan. Today is the day when you have seen profit taking across asset classes, and the same is the case with commodities as well. With the dollar index trading at around 3-week highs, you have seen some money coming out of commodities, especially in case of gold, where we did see highs of 1695 in this week itself. It's trading around 1650 right now on your screens. Same is the case with other metals. Base metal prices, which were trading at a multi-month highs in the markets yesterday, have come off nearly 0.5% to 1% right now. The US fiscal deal euphoria seems to be really easing or fading out of the markets, and that is bringing back pressure into the markets. Also, the feeling that the Fed cash infusion into the markets is going to be limited in sense of volume and duration is another thing that has led to decline in prices. Same is the case with crude as well. From those 3-month highs, we have seen 0.5% of a cut coming in for a couple of sessions now in that space as well. Let's get in then Hitesh Jain from IIFL, and he joins us with his strategies on all of those commodities. Hitesh, I welcome. What's your sense now coming in for gold? Because the sharp decline that we have seen in last 24 hours, how would you make use of that?
See, we may witness a short-term setback for the gold bugs, especially considering that Fed intends to end the monthly bond buying program before this year end, and which prices are trading at 1650, a close below 1650 could take us to 1630 as well. So in the short run, we see a decline, and accordingly we prefer to sell gold February contract around 30,750 with a target of 3600 and a stop loss of 3850.
Hitesh, also what's your sense coming in for crude now? Because there have been statements from OPEC, there is this talk about US inventories also declining, but even then we have seen profit taking coming in. How does the current positions look to you?
See, on the charts as well, crude oil prices clearly face, WTI crude oil prices faces a stiff resistance around $94, and they have not been able to clear that range. So we could see prices pairing gains and moving lower towards $90. So accordingly, we'd again prefer to sell crude today, January contract around 5070 with a target of 5,000 and a stop loss of 5110.
All right, Hitesh, appreciate you joining us with your sense on all of those commodities. The 2 sell calls both in gold and crude as well for the intraday market in commodities. With that, it's back to you, Megha.
Thanks very much, Manisha, as always, for keeping us up to speed with what's happening with the commodities pocket right now.